if you choose the path of getting on the treadmill, which it absolutely is a treadmill that goes faster and faster and faster, then VC is amazing because it can unlock like enormous scale. Firing people is awful. It's just gut-wrenching, and especially when you have to do that repeatedly in like a short duration of time. Well, does this help support the founders? If it doesn't, it's like, okay, like just, do something else.
Welcome to Trailblazers, the podcast where we sit down with contrarian tech leaders who found conventional success in unconventional ways. Today on the show, I am so excited to be joined by Shomik Ghosh, who is also joining us with some news to announce right after the bio we read. Shomik is a longtime venture investor who most recently was a partner at Bold Start Ventures, an inception-focused fund backing technical founders at day zero. While at Bold Start, he supported companies like Cloud Query, Kiln AI, and Ask Why, and played a role in many other early investments. Before Bold Start, Shomik was an investor at Top Tier Capital, where he focused on growth stage companies including Circle CI, Anaplan, Remitly, Shape Security, and Snyk. His path into venture was anything but traditional, with early experience spanning tech M&A, venture debt, a failed startup, and fixed income sales and trading. Originally from New Jersey and a Pittsburgh alum, Shomik is an avid hiker and aspiring guitarist, progress very much still in flight, he made sure we noted that, and the proud dad of a 1.5-year-old son who now takes up all of his spare time. Let's welcome Shomik.
Well, thank you for having me, Erica. And it's the sun certainly takes up a lot of time, but the guitar is actually really funny because the more I do that, like the more excited he gets. So I'm trying to like learn it so I can play some of his favorite tunes, like even like Wheels on the Bus or something. But long way from being able to do that.
I love that. That's so nice. I always say like a house with music is the best kind of house. Like whether it's piano, whether it's guitar, whether it's singing. It's just so joyful, And when kids are around, you want to make them laugh. You want to have a lot of dancing and joy, and that's wonderful you're doing that.
It's one of the fun things. But yeah, right now, kind of I strum it, and then he's like, "What are you doing?"
Yeah, he's like, "It doesn't sound great." I'm not sure that's what guitar sounds like.
But it'll get better.
What's his name?
His name is Arav.
Arav, beautiful. And what's his personality like? I feel like 1.5, you start to tell. Any earlier, like maybe at 1, they start to become a human, and then 1.5, you really get a sense. So, what is he like?
So his name means it's a blend of basically like calm and melodic, and so my wife's name means music, and then mine was technically like I was named after like a sage who was like very calm or something like that. And so like that was kind of the blend of it. And he is not that at all. He is like very rambunctious. He talks like a ton. He's 1.5 years old. He's already talking like fully. He runs around. He does crazy things. And so, yeah, maybe one day it'll be more of his namesake, but he loves music. So at least that
you got the guitar going.
Yeah,
maybe
exactly.
You're really trying to push the name. You're like seeing his natural tendencies and you're just pushing him in the other direction. I have a good friend who named his son Rowdy.
Ooh.
And I was like,
dog?
What?
After a dog maybe? Or?
No, not after a dog.
Okay.
Just like love the name.
Nice. I like that.
And I was like, wow, you're like really in for it, because like if your child lives up to that, like if your child is rowdy, you're going to really regret calling them rowdy. So I think it's smart. You picked a name where like in an ideal world, your child is calm. Your child is melodic. Like it's making your job easier as a parent.
Yeah. It's nice to think that will happen. But yeah, I have a feeling it's not going to quite be that, but we'll see.
I love it. Yeah, being a dad sounds really wonderful. So let's get to just the heart of this. I'll get into our hard questions later, but I want to start with your big news. Huge news. And I'm so honored you're sharing it here for the first time. So tell us, what's next? What's your news?
Well, yeah. Well, thank you for having me on to share it. And it's, I think, very exciting. So I'm joining Sierra Ventures as a partner, and I guess a little bit about the fund. So Sierra's been around for 43 years. I think we're on fund 14, I believe, or something like that. The Roman numerals get confusing for me, so
totally. Especially 14. It's got lots of them. And there's one that comes before the V, I think. Yeah.
Sometimes I'm like, is it 14, 15? Like I'm not sure, but and what's really amazing is like there's been some companies that have been backed like Intuit and Intuitive Surgical, and these companies that were major companies out of the valley quite early on, and then recently it's more of companies like there's ReFi Health, there's SpectroCloud, there's Phenom people. These companies have done really well from kind of initial stages where they backed them to now 100 million plus of ARR, and so it's something that we're very excited about. The reason why I joined was actually basically because one of the things that I was really looking for was a place where I could work with people who kind of just really loved the just supporting founders, kind of being behind them the whole time. And one of the cool things about Sierra is like there's all the partners, but then also the whole team actually attends pitch meetings. And part of the reason for that is because when you get the whole team just aligned, right? It's like everybody from doing the scheduling to marketing to whatever. Everyone's just like understands what the founder's building, understands the ethos that they're pursuing, and just wants to work with them, right? And so there's never a question of like, is this an important conversation? It's just like, no. Everyone on the team knows that is a founder we're supporting. Everyone's behind them, and so like, drop everything, go help that founder, whoever you are. And so that's something that really excited me coming into the firm, and the ethos that we're trying to still embody.
I love it. I have so many questions. Well, I guess my first is logistically, how does everyone meet with the founders? Is it like, first pitches, are done by like junior investors and partners? Again, every firm's different. Is it once we've invested, we have like a giant onboarding call / celebration? I mean, I'm just selfishly curious. Like, that sounds epic, but also sounds like a lot of time.
It is a lot of time. So typically when we do the call it like the first like serious pitch meeting, we will have just like kind of everybody attend that. Now, in terms of like people who ask questions and stuff, like obviously it will typically be a subset of the people who are asking most of the questions, but it's just like everyone's just there to kind of, one, show support and show that we're there for the founders, but two, also have that learning. And then from there, kind of, it usually gets a little bit more tactical into like diligence stuff that we want to figure out from there. And so after that, it'll kind of be a smaller subset of folks, or maybe partner only or whatever, but up until that point, it's not just the investment team. It's kind of everybody to just get to learn from them. Not only that, it's also like learn from, like, we just looked at a consumer AI company, and it's not an area that I would say we have a very strong competency in, as we typically have done B2B, but like it was just interesting to learn how they were doing things, and like the world that very well of like these influencers and stuff, and how they do marketing on TikTok and like AI generated content. It was mind blowing. Like they were using virtual assistants on mobile devices through, somehow they were like, they didn't physically have them, but they were pinging them through the internet, and then just posting on like TikTok and Instagram and stuff like that, and getting like millions, hundreds of millions of views, like insane. So anyway, really, really fascinating thing.
I love that. I feel like also our industry, for better or worse, we really segment people into like sector and stage. And so if you are more of like an enterprisey person, like you're not going to see a lot of consumer deals. And that's sad because there's so much to be learned. Like, a human is buying anything at the end of the day, even if they, as a human that works for a business and making a decision on behalf of a business, it's all psychology. There's a lot of like fundamental through lines between technology just across the board, whether it's consumer or B2B. So that's probably really fun for you as someone who, like, I mean, I know your track record. I know Bold Start, such enterprise software players. Like, I actually met with someone from the team a few weeks ago, and we were like, we don't have that much overlap in investing, but I love what you're doing. We have some overlap, but Clay, we've got Clay, the claim to fame. Yes, exactly. There's like, we listed out like the 6 categories, and it's like, okay, like the bottom 2 kinda, But I think, that's something that's really exciting, is like having this broader scope. What is your scope going to look like now at Sierra? When you think about like the sectors you're going to be investing in and the stage, how does that differ from Bold Start? And I'm also asking this selfishly, so like all your friends who are listening can update their CRM and be like, okay, this is now what I need to send him. Okay, got it.
Yeah, well, so I would say like one of the interesting things about Sierra is like B2B focus, but B2B can mean a lot of things, right? So for example, we've got quantum computing companies. Like, is that frontier tech? Is that B2B? Like, what do you want to call that? It just is robotics, right? That's another area where it's hard to say what people would categorize that. But in general, it's like, in the end, there's typically a business that is consuming the end product, right? And so that's kind of how we think about it. But in terms of like where we could focus within that, I mean, there's tons of innovation right now happening in manufacturing automation, right? There's, most recently, I was doing some research into stablecoins and seeing like, well, what are the business impacts that could come out from there? And so there's, I will say, we will fundamentally have this core of this B2B focus, but the industries that would be classically considered like enterprise software, that will always be a core focus of ours, but we're also going to have these other areas that we've always invested in and will continue to do as long as there's that business on the end. And so that's kind of the general focus. But in the sense of like with the enterprise competency, like we have a CXO board, chief executive officer board.
I appreciate the explanation. I told him, I was like, don't use too much lingo. You have to explain it.
So it's so there's CIOs, there's CTOs of like, the largest companies like Dick's Sporting Goods, Walmart, like Medtronic, things like that. And so those folks again can like really help these software companies or anyone that has that B2B layer. So think of like if you're making something that is selling med device software. Well, turns out we know people who run the orgs of some of those key companies, and so that's kind of the focus.
Yeah, no, it's really nice to have that value prop of like we have all these insane buyers here who you can, if nothing else, ask for advice, right? Super, super valuable. So I spend a lot of my time talking with partners who go earlier and earlier and earlier, and not just in the sense that they're investing earlier and earlier, but they're often writing smaller and smaller checks and starting their own firms. And you're in an interesting spot where you were at, I would call it an emerged fund, but still sort of getting started at Bold Start. And instead of starting your own fund or joining a smaller fund, which happens often as you go up the career ladder in our world, right? You want to have more responsibility, you want to have more of the pie, you go to an even older firm and a more legendary firm, which is a transition I don't see often. So I wanted to ask you, did you ever consider starting your own fund? Did you ever consider going to an even smaller, more emerging fund as like a co-founder partner? Or were you always thinking, I want to go more institutional, more legendary, more 40 plus years I've been around, because I don't see that very often.
Yeah, so I would say like with Bold Start, right? Like one of the things was, we were a small team. There was 4 partners. We worked very closely with each other. We worked together for a long time, and so that was not an easy decision to leave. But part of the thing was, Bold Start is focused solely on inception and being the first check for all the founders. And with Sierra, it's like, there are some inception investments that are made. There are some seed investments. There's some Series A. There's even some Series B checks that we've done. Right. Most recent, I think, in Reflection AI. And so, there's this broader focus that I think we have at Sierra, just that comes from just having a long track record of doing it. And so when I went through the thought process, it was kind of funny. Like I spent time with the classic multi-stage funds. I would say what's really interesting that's happening in the multi-stage universe is there's this, in the hedge fund world, they call it like these pod structures, but basically there's these, you're the infra team. The infra team cannot do actually a single application layer deal, right? And what's really interesting is like...
We'll talk about, by the way, for everyone who is listening, like an Andreessen Horowitz is a good example of a firm that's a multi-stage. If you need like something to grab this, we'll use Andreessen as sort of a placeholder.
Yeah. And so you have the infra team and you have the apps team, right? And they have like very specific competencies that they're building around those areas. That being said, like the way my mind works, at least, is like sometimes I'll make an app layer investment, and that will actually feed a security problem that I'm seeing. A good example actually was like when I was at Top Tier, I did Circle CI, and the reason actually that I found Sneak was because within Circle CI we had problems in the security pipeline of like the CI pipeline, for which is continuous integration pipeline for developers, and then that led to me like going and searching for stuff, and then I found Sneak, right? And so if I was only like an infra investor, or if I was only an app investor, like I wouldn't. For me, at least, I wouldn't get that context, right? So that was kind of why the multi-stage funds didn't make sense for me personally, even though they made sense for a ton of my other friends who've gone and are doing very well at those places. And then the question became to like starting my own fund. That was something where, when I joined Bold Start, even though I joined at Fund 4, we were still doing a lot of work in terms of just getting the brand together, getting LPs, like stuff like that. And so I got to be involved with a lot of that. And it's a lot of work, as you know.
You saw the dark side.
And so I was like, okay, like that's not necessarily what I want to choose for myself. And then joining some of the other people, a big thing I would say is like there's a ton of people who are leaving these so-called brand name multi-stage funds to start their own funds. What's really interesting is like there's so much branding work that needs to happen when you leave from one of those institutions and no longer have that name behind your email. Like the amount of founders that like know that fund, they'll just naturally pick up your email, right? And they'll respond. when that doesn't happen, it's now like you got to codify a different approach. And I think a lot of the folks have amazing track records, but don't have enough of that like kind of underlying layer built yet, or have thought through it deeply enough. And that to me is like the challenge with some of these funds is like they're just gonna have to do that learning, right? Which we did at Bold Start, and Sierra did one. So everyone has to do it, but like they didn't quite have that formulated. And so that for me was like the best situation, was still a small team, but like with the longevity, with the LP base that just kind of allows us to go and invest in the best companies.
Yeah, it's so interesting to hear how you were framing it in your mind, and I think what I'm hearing is that flexibility of investing was really important to you. And you could have gotten that if you started your own fund or joined someone small, but then you would have had this branding issue and sort of the like back office gritting through it issue. And this gives you the flexibility, like you said, you were looking for, not only with stage, but also with areas of interest, right? And so I think that's a really interesting way to frame it. I want to just, before we get too deep into this, I do want to ask you our intro question we usually ask, because you hinted before we hopped on that you had a good answer for this. Shomik did his homework, listened to other episodes. So I wanted to pivot for a second. We'll get back to Sierra, but I wanted to hear your answer to the question that we ask every guest. So our podcast is a lot about the hard journey. And we don't like to just glorify all the good things. There's also some hard moments, like you hinted at leaving Bold Start, not always easy. So I'd love for you to share what's been the hardest part of your journey so far. It can be personal, it can be professional, but tell us a little bit more about the harder times.
Yeah, I mean, I guess one of the hardest things was kind of personal, but then kind of work related, and it sort of led me to have this introspection as to what I really want to do next, which was so when my son was born, actually even before he was born, he was kind of diagnosed with a potential heart issue while still in utero. And so we had tons of appointments, like specialists out the wazoo, like just like constantly, like the pregnancy was more medicalized than fun, so to speak, right?
Yeah.
And then he was born, and he actually ended up having a different problem, and thankfully, the NICU team was in the room because they saved his life. The Stanford NICU team has worked miracles, but he was born, and he was having trouble breathing, and so they took him away, and then he had surgery the next day. And he's doing great now, and he's fine. And he was a lot of stuff happened. He had follow-ups and all that sort of stuff. And then my wife also had a very hard birth, and then she actually required some surgeries as well. And it was just this like intense period of time where we were going through this on the personal side, and then it's like, you still are there to support. Like, it's not like I didn't have my board seat still and stuff, and so you still want to be there for the founders. You still want to also help your colleagues who, like, you want to find the next founder to back, and so on and so forth. And that was quite a challenging time to just like managing this of like, hey, I got to focus on home, but then like also having this guilt of like, are you doing what you should be doing and honoring your commitment to your LPs and to your team, and so that was a really challenging time, just mentally. Also, it just was like it just took a lot to just understand what was happening, but that's also what kind of led to the realization that, like, hey, maybe inception investing is not like the right place for me, and led me on this journey to like go and find Sierra, because it was just this, I want to do something that where I really feel energy a ton, and I do feel energy of like being the first check into founders, but I also love just Erica being like, hey, Shomik, like, this is a really cool company that like I think you would love, like, and just being able to see that I wouldn't have seen if it was inception only. And so that kind of was what led to it. But yeah, he's doing well now, and life's a lot better. But yeah.
Wow. Well, thank you for sharing that. Yeah. I can only imagine. And I think so much of our industry, unfortunately, we don't talk about the hard stuff. Like I won't say specifics yet, because your podcast is going to come out before this person, but I had someone else on the podcast who has more of like a health issue that I had no idea. And this is, a prominent GP, crushing it by all accounts. And we all have so many personal things going on, and there's this taboo almost that, you can't talk about it, or you can't take medical leave, or you can't take a beat, because you always have to be there for your founders. You always have to, like you said, show up to the board meetings and be on your A game. So I appreciate you sharing that.
Yeah, well, thank you. No, it's I think one, it's like having great team members around you is really important, and like I was fortunate to have some great people around me, and same with like at Sierra, I think same with them. Like when they had obviously heard about some of this stuff, and they were just like, first thing was like, how you doing? Like how's
he okay?
Yeah, like,
is he okay? Is she okay?
Yeah, and so I think it goes to the culture aspect to it, where it's like I had joined a startup at one point, and like the culture was really not great. And even though the individual was highly known and just known in various circles and things like that, but like just for whatever reason, the culture that we all created was not the right place to be in, and that's like I think really important, because like other people see that too, and like the LPs see that, the founders see that. Like it just, things won't work if like the culture isn't working. So that I think to me is like the biggest thing is like we talk so much about culture with the startups that we're backing, but then a lot of VC funds don't look inward and be like, hey, how do we do this? And I think like the ones that do well, I mean Sequoia talks about this all the time, and you can see that in the longevity of some of the team members and stuff, because I think they focus so much on this. So
yeah, I think this is something that we don't talk enough about on the venture side, to your point. Like we always talk about, there's like the 996 culture, and then there's like, be good to your employees and treat them well, and there's a lot of articles about that, but we don't talk enough about VCs. I think though one of the benefits is that our industry is very small, and so word gets out. So we all know those places where our friends are like losing hair and can't take time off if they have a medical issue. And so I at least hope, I don't know how you feel, but I hope that the small size of the industry means that eventually those firms don't really last, because, they don't treat their people right.
Could be, yeah. I mean, I think also like there's going to be just different cultures that work, and as people take over different funds and they institute their own thing, like they're going to be shaped differently, and so like sometimes that might be maybe a more aggressive culture, so to speak, but like maybe that works for the people who want to do that in that way, and so I think like it's much more of this like just like culture people fit or something, where it's much where you want to attract those people. And so like I think again what got me excited is it's like we stand behind the founders, right? We never want to stand in front of them, and so that's like, how do we elevate the founders at every single aspect, right? It's like even the fact of like going on a podcast is because like, hey, that will help the brand name to elevate the founders more, right? Like that's kind of embodied by this whole team approach to like everyone being in the pitch meeting, everyone understanding where the founder's coming from, everyone understanding what the founder does so we can support them. And so that to me is like the ethos that I really like, and why I joined Sierra, but like also why it fits for the people who are on this team. Yeah. Whereas there's certain other funds where like that would not be the case. Like I know many other funds where it's like the whole team is in the meeting with the founder would be like taboo and would not make sense, and it wouldn't make sense for that culture either.
Yeah, I love this idea of like culture people fit, CPF. You could write a whole essay on that. But I do think that's true. Like I think every firm is different, and you just got to find your right fit, just like every company is different. Hinting at what you mentioned earlier, you were at a startup where the culture maybe wasn't so great. How was operating? I mean, when I read your bio, I looked at your resume. You've been an investor for a while. From my understanding, that was your one and only operating stint. Did you like it despite the culture? Like, what was it like operating, and what made you decide, oh, you know what, actually investing is more my speed?
There's certain aspects that definitely are really exciting, right? Like when you're building towards this one clear goal, right? Like in venture, it's like, what's the clear goal? It's like, hey, we're going to back amazing founders. The hard part is like, okay, well, there's so many different ways to go reach that founder. But when you're building towards a goal of like, we're going to build this one product, there's something just really cool about like, okay, like then that's what we got to go talk to customers. We got to understand how can we build the product in the more seamless way. We got to understand who do we recruit to. Like you just push forward towards that, and that is really, really exciting. The other thing is like, because of that, just like really clear shared mission, you were just constantly communicating with who's around you. And I think that's like the funniest thing is like a lot of times when you go from operating to like say, VC is like VC is almost kind of a bit more in some cases an IC like single player game of which you then do with others. But when you're operating, you have to be like just working with others. And so like the Slack channel just like goes down in volume and like you don't have like party parrot and stuff anymore, like you just have like it's just so that is something that you definitely miss, is just this like that sort of cadence. You can kind of recreate that with some of the founders that you get close with and you're working with them, but you're still outside the team from a VC perspective. So that's one kind of challenge. But I will say like the empathy that you get for the founders and any operators is like firing people is awful. It's like it's the worst thing, and it's just like it's just gut wrenching, and especially when you have to do that like repeatedly in like a short duration of time. Like I do not want to go back to that because that really was.
Were you part of that? Were you helping fire people? Was that a part of your role?
Yeah, like because basically like I don't even know how to call it like a head of ops type of role or something, was what it morphed into. And so that led to, sometimes people weren't a right fit and kind of just being like, hey, like trying to coach them through of like, how could we figure this out? And then if not, like, it's not going to work out. Yeah, that was not fun.
Rough. That's not for everyone. But you, like you said, you learn what it's like, and it's not just numbers on a spreadsheet. Like, you laid off X number of people. It's like, that's a bunch of different conversations that have to be had. So what made you decide investing? Second part of my question, like why investing over operating? I'm hearing all these pros for operating, the camaraderie, the firing, not so much. But why investing as the route?
So I think investing was actually always pretty exciting to me, because actually before I even got into the operating stint, I was in a venture debt fund. So like I'd already been doing some investing.
WTI, right?
Yeah, at WTI.
Yeah, which is like the only venture debt fund that I like actually know. And I saw it on your resume and I was like, wow, okay.
Yeah. They've been around for a really long time.
They're like pretty legit, and they're in New York. Yeah.
Claim to fame. One of the, I think they gave venture debt to Google and Facebook.
Yeah.
And
not
those
bad.
Ended up being pretty nice returns. But I think so I'd already kind of known investing from that side, and then also where we took the startup and where it pivoted actually was towards the end. It started almost becoming like a startup advisory shop. And so originally we were trying to build like an angel list for family office, like a hyper curated angel list, and then that shifted into this kind of more advisory sort of facility. So we were working with founders. So that was always like, I was never far from working with founders. It was just like it had shifted into a different way. And so when I kind of picked my head up to explore what was next, the way I joined Top Tier was they were looking for someone to come on the team, and my background was like I had investment banking, and then I'd done like some venture investing, and they were just like, oh, okay, cool, like so you would be a growth investor, and it's kind of true. Like I did have I could look at the numbers and I knew what startups were doing and kind of understood the tech, and so that's what led to the growth investing side. But I think one of the things for me from the growth side is like it's really hard to build like the deep relationship with the teams that you get when you are there, like kind of at the early stage. And so you'd go into board meetings and like you'd be there, you'd listen, you'd maybe offer some connections or advice or whatever. But at the end, you'd leave and like, you'd see the Series A investor still like hanging out and being like, oh yeah, like let's go grab some coffee or you just hang around the office. And that, from a growth investor perspective, was just harder to get that sort of just close relationship. And so I was looking for that, and that's kind of what led to the early stage side.
Totally. You're like, be my friend, not just their friend. This is, I think, actually for people who are empathetic, high EQ, actually want to connect, not just like look at numbers on a spreadsheet, but actually connect with the founder. This is what I hear all the time from like even my friends who do it now, like a lot of growth stage stuff, like that there's like that gap because the person who bet on you first, the first person on your board when it was like the two founders and that one, let's say like lead at the A or lead at the seed, whatever, you have such a different relationship with them. And they bet on you before you had anything. I mean, pre-product market fit most of the time, at least used to be. And so Yeah, I think that's something I hear very common from a lot of people.
Yeah, I think I will say like some of the aspects of the growth side that are fun though is like you kind of know what dials exactly to adjust, and so because of like the fact that it's a bit more formed, right? It's like hey, we could really use demand gen because this is what's happening with the funnel, or there's different things that you can kind of start to be like, interesting. Like I think this is my hypothesis is like that this is not working, and here's like the type of role that would fix it. Really a lot harder to do that at the early stage because there's so many freaking variables.
It's like everything's up, everything's up and changing, and we don't know what to do.
So I think the biggest thing that we do as board members at the early stage, right, is just like trying to focus on like what are the one or two variables that matter in and of that instance, right? Because it's like whether it's seed, pre-seed, seed, or Series A, at each point in time, like you're still trying to find like, okay, what's the next milestone that I can get to that would de-risk the startup more to then be able to unlock future funding, right? And so that hyper focus to like, hey, this is the thing that we could do. We've got all these other things that we could also figure out, but like we just need to align on this because this is what actually matters. That is also the challenging part of it, but also like where you get this deep relationship because you're hearing and you're talking with like all these other problems. And then in the end, you're like, yeah, those are all a lot of problems. This is what we got to focus on, and this is what we're going to go do together. And I think that's just like, later on as you get to like the later stages, you kind of laugh together. You're like, oh, remember when we were going through that or doing through this? And it's like, yeah, the singular focus on what matters is just so freaking hard, but also super important. So.
Yeah, no, it's so fun. It's cool that you've seen things all the way up and down the stack and you can talk about sort of pros and cons at each stage. I think a lot of folks in our industry stay so early. They're always like pre-A most of the time. And so, that board experience is really valuable.
Yeah, we'll see. The IPOs are kind of crazy. I will say that's a whole different can of worms. So like,
and very market dependent. So it's like your job, you're either on, you're off. It's stressful.
Yeah. I think that's like the IPO stuff is like you can never the best piece of advice that I got from somebody else who'd done it a number of times was just like, just get a CFO who's done it before and can walk you through the process. And it's like, it goes so much smoother. And hence why, like a lot of times for those growth investors, or like even when we're thinking about a company that, we back that is getting to that stage, a lot of times we're looking for actually like the VP finance or the director of finance who's actually been through an IPO, but may not have had the CFO title. Because they've still seen what
they're
it's
excited
like,
about that
and then
to grow into it.
And then they're excited to take on the CFO role, and so you get that excitement of them like wanting to join, wanting to do a ton of work to go and prepare for it. But they've also seen it before, so they're not starting from scratch, and that's been just a pretty powerful kind of cocktail that I've seen at least.
Yeah, it's super interesting. I mean, that's the beauty of doing it so many times and being on several boards is what they need. Like you said, the levers, the main problems is like we need to prep and we need to prep right. Who needs to come in? And like you said, that profile makes a lot of sense. On Trailblazers, we spotlight founders who succeed by doing things differently, not by following the playbook, but by rewriting it. Many of those unconventional builders and the VCs backing them run on Brex because it helps them scale with speed and focus. From smart corporate cards and high-yield banking to AI-powered expense management, Brex gives startups the financial stack they need from day one so they can spend more time building and less time managing back-office operations. More than 30,000 companies, from breakout startups like Anthropic and Cursor to global leaders like DoorDash and Plaid, trust Brex to help them spend smarter and move faster. That's why we, as a venture firm and also the podcast, run on Brex too. Sign up at brex.com/trailblazerspod to get started and claim exclusive rewards. That's brex.com/TRAILBLAZERSPOD. RocketReach is the leading sales and lead intelligence solution trusted by sales, marketing, recruiting, and business development teams to grow their businesses. Whether you're looking for a developer halfway around the world, a C-level executive in New York, or a potential investor in Silicon Valley, we connect you directly. With RocketReach, you can easily access the most comprehensive, accurate compilation of emails and phone numbers on Earth. That puts you in front of the right people faster and backs you up with a database that reaches across industries, markets, and titles, using AI to continually improve the quality of your contacts. With RocketReach, you can reach anyone so you can reach higher. Many of you know I love cold outreach. It's been the root of many of my success so far, and this is the tool that I've used the whole time. Trailblazer listeners get 15% off any plan at rocketreach.co/trailblazers. That's rocketreach.co/trailblazers. I do have one final question before our lightning round. What is the one thing you're most looking forward to now with this new gig? I mean, we talked a lot about the legendary history that they have. They've backed a lot of great companies. We talked about the flexibility now to do a lot of different sectors. Talk to me and be all these different stages. Talk to me about what you're most excited about with this new firm.
Yeah, I mean, I think most excited is excited about the team. I think that's the coolest part. Like, we're all in the office together. We like being around each other. We like to have fun together, and then this kind of just shared impetus to be like, our sole mission is to be behind the founders and serve them. And so that to me is just like, it just streamlines a lot of stuff. Like, sometimes you can just have something where, somebody asks a question, it's just like, well, does this help support the founders?
You have like a North Star, clear North Star.
If it doesn't, it's like, okay, like, just, do something else. And so that's really what I'm excited about. And then I think the other aspect is just like, we're reaching the stage where like AI will start to really broaden out a lot. And like, I like to look at markets and public markets a lot as well. And like, one of the interesting things that you're seeing is like, traditionally they call it the Magnificent Seven, right? The Mag 7, which are like these big hyperscaler stocks, right? And they did really, really well in like 2024, 2025. What you're starting to see in 2026 is actually like, it's the little small companies, right? It's the small cap companies that are starting to outperform actually these mega ones. And why is that happening? It's like, well, interest rates, one, are coming down, so that makes things easier. But two, I think actually you're starting to see like the productivity benefits that AI is doing to like the random manufacturing company that's just like, oh, actually, our developers can use Cursor or whatever solution they'd like to use. And that to me is really exciting, right? Because as we get that broadening out, there's going to be so many sectors that will all of a sudden become super interesting from a venture perspective. And so that's where it's like, yes, we can have this enterprise software core, but it's like, it is truly this B2B type focus of like, hey, we want to serve businesses, and what are ways to do that? And so like, I know you know a lot of marketers and things like that. Like, I've looked at a number of like next gen AI native marketing companies, and like the stuff they're doing is freaking fascinating.
It's mind blowing. Yeah.
And you're just like, whoa, like if you pull this off and you tie it to like Nano Banana and you're able to generate like videos off of it and stuff, like all of this is going to change. And that to me is just, one of the most exciting times. So
yeah. And I love that you look to public markets as sort of like an indicator for your own investing, because like you said, a lot of these like future of work tooling, Cursor being the most obvious, is really making it, and all this next gen marketing stuff is making it so that, instead of needing your giant teams now, you can do a lot more with a lot less, and meet your customers where they're at, which is really exciting.
Yeah, we'll see. I think we're starting to see more and more of those smaller companies
slow,
doing stuff. Yeah,
but it's like it's getting there.
Yeah.
Are there any sectors that you are really, really excited about? I know it's enterprisey broadly, but are there any sectors that you have your eye on right now?
I mean, I could just, like I looked at robotics data recently, still super interested in what's happening with robotic foundation models. And then I think the bottleneck to that is going to be the data that feeds that. So everything from egocentric data to teleop to, whatever in that stack, I think is super interesting. I think in AI in general, like we still are having this, there's this, like Daniel Kahneman's book, Thinking Fast and Slow, right? System 1 and System 2. I think like you have a lot of System 1 in the foundation models, and then you have, kind of the System 2 reasoning layer that is super interesting to see, like, is that something that the labs are going to bundle in themselves, or is there room for somebody else to come in? So we've looked at like neurosymbolic companies, like recursive LLMs are now a thing that's interesting. So all that stuff, like the research there is fascinating, and it's coming out at such a fast pace. And so trying to stay on top of that and see what's interesting. And then like, I think, again, to this broadening out side of things, like I've talked to now 3 different manufacturing related companies where it's like one's trying to solve the labor shortage, one is trying to do software to go from CAD design to the specifications that the machine needs to actually produce that widget, and then some are just doing AI agents that you can deploy into different workflows to make it easier. And I think as we kind of get this, the world is reindustrializing, those areas are super interesting. So anyway, those are some that are just like top of mind, but like I'm excited about a lot of things. So it's
you're like every day it changes. But like to your point, it's hard to stay on top of all of it, like especially because you are spending a lot of time looking at public markets as indicators. It's also the research, it's also the models, it's also testing yourself. Like I find it's hard to keep track of it all. But those sound like some interesting spaces. If you work in venture or startups, you know the constant juggling act. Replying to messages from co-investors, founders, LPs, customers, and teammates all hitting your personal number. I know this very well. We all hand out our cell, which means your EA can't help an iMessage, and important threads get buried. That's why I'm very excited about Quo, formerly OpenPhone. It's built for founders and investors like us who want communication that feels personal but stays organized. Quo gives you a dedicated business line on your existing cell phone. And if you already have a business number, you can bring it with you for free. Plus, you'll get call summaries, transcripts, and an AI voice agent called Sona that can answer and schedule when you're offline. We're actually cooking up something fun with the Quo team right now and using that same voice AI tech in a new way for our firm. More soon, but it's a great reminder that you can use voice AI to stay top of mind of your customers' needs. Quo is trusted by over 90,000 businesses and rated number 1 on G2 for customer satisfaction. You can get 20% off your first 3 months at quo.com/trailblazers. That's quo.com/trailblazers. So I've actually used Gusto at 3 different companies, and every time it's been such a relief. It's simple, it's reliable, and my paycheck was always on time, no drama. And unlike the big clunky payroll systems out there, Gusto is online payroll and benefit software specifically built for small businesses. It's all-in-one, remote-friendly, and incredibly easy to use, so you can pay, hire, onboard, and support your team from anywhere. For smaller startups in particular, I have found that it's the most affordable and easy to set up option, and it's the one that we recommend to all of our startups at our firm. Try Gusto today at gusto.com/trailblazers and get 3 months free when you run your first payroll. That's 3 months of free payroll at gusto.com/trailblazers. One more time, gusto.com/trailblazers. Okay, so let's get into the lightning round quickly. Let me know whatever comes to mind first, okay? Book in hand or podcast in ears?
Podcast in ears.
Any favorites?
Dwarkesh podcast is one
Classic.
that love. Obviously, I've listened to yours, and I think you've done some great stuff on Trailblazers. And then random ones would be just like I've been trying to explore like cooking podcasts. I'm trying to get better at like cooking at home, so like things like that. Or I think there's some really interesting science podcasts as well. So basically trying to explore some other ones because Charlie Munger is all about multidisciplinary learning, and I think like again this is where what drives that is like if you do multidisciplinary learning, you can then tie together stuff that helps you make the next investment. So anyway, that's where I focus.
You just made the pitch for why I live in New York and not the Bay.
Oh,
it's very multidisciplinary, and
very
I think
true.
It helps me think about investments very creatively more than most. So anyway, that was literally my pitch for why I stay here. Morning person or night owl?
Morning person. With my son, I kind of have to be. So yeah.
Yeah. When you become a dad, it doesn't matter what your preference is; it flips. This kind of you hinted at this, but cooking dinner or ordering in?
Well, so actually, funnily enough, like it is hard for me to cook. So I'm trying to do more hard things. So I'm trying to learn how to cook and stuff like that. But absolutely, it's easier, and I love the taste of food when it's ordered in. So like, there's this one place called Healthy Tiffin.
Okay.
If anyone is interested, it's really good, healthy Indian food. Love ordering that because it's hard to find healthy Indian food that tastes good. So if it comes down to it, I'll probably just order that, and makes it easier. But I'm trying to do the hard things. So yeah.
I totally get it, and I'm in the exact same boat, and I'm inspired by, I think a cooking podcast might ignite my interest. If you ever need New York recs on good Indian food, I have a lot. So
okay, yes.
I will let you know. VC or bootstrapping?
Well, yeah, I mean, I got to say VC. I will say also the other thing is like for VC, what's really interesting is like you look at the generational companies that are at the top of the public markets right now, and they have required VC funding to do it, right? And so that to me is like the really exciting part is like if you choose the path of getting on the treadmill, which it absolutely is a treadmill that goes faster and faster and faster, then VC is amazing because it can unlock like enormous scale. But like, do you really want to get on that treadmill or not? I don't know. I think that's a lot of questions that a lot of people should ask. It also helps us selfishly as VCs because we don't want to back folks who aren't ready to go on this like crazy journey where they just have to run and be like a hamster wheel. And so I think that's something that people should consider. But absolutely, if you want to go big, VC is one of the best. So
do you see that staying? I mean, there's all this talk of like the one person, $1 billion company. It's a nice marketing headline. Do you see that being something that happens anytime soon, or do you think that it's always going to require venture regardless of small team?
I think you're going to see it. I think you're going to see it soon. I think one of the questions will be just like the time frame that some of those companies could grow. Because if you are self-funding through your own capital, like you can build really like Epic, the EHR system, right, in healthcare, like homegrown,
Crazy.
And massive scale, but like it takes a lot of time to get there. And so I think like there are going to be aspects of AI that will make it go a little bit faster, but I think still the fastest path to get that scale is taking on funding. Now, to your point, like if it's like you're going to raise $3 million and then that's going to get you to the outcome that you want. I think that we're actually going to see more of. So
yeah. But they call it seed strapping, right? You like raise up to a seed and then you strap the rest of the way. I'm like, okay, that works.
I like that. Yeah. Okay, that's a good term. Yeah.
Yeah. I mean, to have the flexibility, I think, is what's great.
Yeah.
Like I think a lot of growth stage investors, founders were dependent on them always. But I think it's nice to sort of get to a certain point and know that you could either choose to raise and go faster or not.
Yeah, I will say though that's starting to shift. Like you think about like Anduril could raise from whoever they want. So it's kind of funny like where it's shifted where now like the growth funds need to like basically go and be like, hey, Anduril, here's how we can help you, because otherwise
it's convince them.
Yeah, exactly.
To take their money, because why would they?
Yeah, and like you think about like there's tons of other pools of capital that want in, like the Morgan Stanley wealth management team and the Goldman wealth management team, all these sort of pools of capital. So that is something that like the venture industry, as it gets bigger, is starting to actually have to compete with all these alternative sources of capital, which is why like at seed stage you're starting to see the Andreessens, the Sequoias, whoever's in the world going downstream. But then flip side is like on the growth stage side, you're starting to see also a bunch of pools of capital. So it's a fun time.
It's a fun time. I think the post-product market fit stuff is so much easier, like the Andurils, because it's already working and up and to the right, and Palmer is a good bet. But our job is fun when it's inception. I know you're not just doing inception anymore, but that's a little scarier. Alrighty, networking dinner or big conference?
I wouldn't call it necessarily a networking dinner, but dinners, yeah.
Smaller dinners.
Yeah, I think like the conferences, it's really hard to get the one-on-one connection that you want with the people, and so smaller dinners is just like every single time you come away with it, and like you just learn something new about that person that lasts for a much longer time. And what I've seen is like once you have that little nugget with that person, it's like you just have that shared sort of sense of things, and so from there, it's like you'll meet interesting people through that person because they'll be like, oh yeah, like, we love mountain biking or something. And then like you'll meet somebody else who also likes mountain biking, and then you'll be like, oh, you guys should connect and like chat and stuff. And I think that to me is you just don't get it as much as conferences. But the one time I will go to conferences is if it's a like a new industry that's forming. So like I went to the Humanoids Summit in the Bay Area because just robotics is moving so quickly that I just want to stay on top of it. So in those sort of at the frontier, I want to go to the conference to see what's the new research and stuff. But otherwise, dinners, yeah.
Love it. What's your favorite type of dinner? Is it with other founders, other VCs, operators? These days, who are you spending a lot of dinners with?
Kind of all the above. I think with the VCs, you get like just tons of learnings about what's working in this market or not. With founders, you're getting to see like the edge of what's happening with executives of large companies. You're seeing like this global view of like, are you actually seeing benefits from AI? Where are you seeing the benefits? It's like trash companies are seeing the benefits through intelligent routing of the trucks, and so like that's like fascinating. It's like, oh yeah, of course, it actually makes sense when you hear it, but like when you actually hear that from somebody who's an executive like at a trash company, you're like, wow, like that's crazy that AI is being used in that way. And so yeah, I don't know. Each set you get different kind of different learnings from it, and so. But sometimes when you mix them, you get like the coolest cocktail. So yeah. Yeah,
and it's like gets spicy, because everyone has different incentives for what they're saying. Love that. Hire slow or fire fast?
Oh yeah, I mean fire fast. It's hard. It's definitely hard. You can, the funniest thing is like you can hire slow, and it could still be the wrong fit for the job. And so then if you don't remedy that by firing fast, like, oh my God, it's horrible. And we were talking before this about a situation that is happening right now. And it's like one of those things where it's just like, yeah, like if the longer that person and when it's not working keeps around, like stuff just starts to dysfunction, deals slip, products slip, stuff like that. So firing fast is super hard. It's also the biggest mistake that we see in every single board meeting with every single founder, even in VC funds. Like it's just the number one mistake.
Because humans care about other humans, and there's this element of it'll figure itself out. And I understand why, but it definitely sucks.
Yeah, but I have seen a lot of people go the hiring slow approach, and it not working. Like I will say, like, Ramp will say they've hired slow, and it's like, but like for every Ramp, there's like a bunch of people who have hired slow, and then like it's not worked out. And so yeah, it's just like, obviously try and hire the right people, but it's a imperfect science. So
absolutely. I find also you don't always have the luxury of hiring slow. Like if you're really growing and like, scaling really fast, which we've seen both with probably different companies, like you don't really have a choice. It's like, please, I'll pay you a lot of money to get me great like founding engineers or AEs or whatever it is. 10 small wins or one big moonshot?
Oh, wow. Oh my God. I have to choose one, huh?
You have to choose one. That's the game.
Well, I guess so. Okay, I guess personally, I would say one big moonshot, because like in that moonshot case, it's just like you got to see something from the earliest stages become this like massive, impactful company, and those are just very special journeys. I will say though, like in the 10 small scenarios, or even just one small scenario, the coolest thing is like seeing the impact that has on the founders and the team's lives, like immediately when they actually get a level of wealth that like nobody expected. And then like seeing what they do afterwards. And so some people like, it's like, hey, they buy nice houses and they lead a good life and like, it's great. But others literally are just like, oh, this is cool. Now I can go. And they actually go for the moonshot because they're just like, yeah, like, I was building this like, small data app that would nest into this other product. And so it sold. But now, no, like I'm going to go after like, manufacturing, whatever it is. Right. And that to me is really interesting. So like, ironically, like personally, the one big moonshot is amazing. But like from a venture firm perspective, actually, those 10 small ones sets up like the future for you have now 10 experienced founders who just can go at it for the next one and go after their big vision, and so that probably actually maybe leads to better returns.
It's very interesting. It's an interesting take. I think, and I love how you framed it in terms of like acquisition and outcome, because like that's our world. I also was thinking of it in the sense of like, selling secondaries. A lot of people have these like negative perceptions around, but to your point, like once a founder's needs are taken care of, then they have the ammo to be like, okay, now let's send it, because like they know that, worst comes to worst, like at least they're going to be okay. And at least their top employees have like enough. And then now it's like, okay, let's just go.
Yeah. I think it's there's like a level at which it's like, hey, and it's hard to know what that level is.
Very hard to know.
But there's definitely a level where it's like, there's certain ones where it's like, okay, that's like a lot. And then the motivation kind of goes away. And there's others which actually like, yeah, like you said, like takes care of like family life and stuff like that, which is super important, just allows them to be focused. And so finding that level is always the hardest part, but when you find it,
it's pretty obvious when you go over. I mean, bull market, I saw some crazy stuff.
Yeah.
I had someone on the podcast, I'll just say a quick story, who we were both involved in a similar company, the same company, and we both like subtly on the podcast were like, is that the example you're thinking of?
You guys knew what
we
you were
knew
talking about.
Exactly. It was really funny. We didn't say it obviously, but being early or being right?
Being right. Yeah. I think being early is just, for me, more fun because even when you're not right, you still have just gone through this like crazy, tense, insane time. And you just, like, what we talked about, like you just build this lifelong relationship of going through that hardship. So that's like amazing from the relationship side. But like being right is obviously generates the returns for the LPs, and so in the end, I want to generate returns for the LPs. And so,
to be clear, we're here to make money. If anyone is questioning it, we want to make a lot of money. Being right makes you money. That was a good answer. So your LPs will be happy. Never post on social media again, and I'm going to extend this to never do another podcast again, because I know you have a great podcast, which we didn't get to, but or never fundraise another dollar again.
Ooh, I would say probably actually the never fundraise another dollar, in the sense of I think what could happen is if you didn't fundraise anymore, you could kind of create this vehicle where you can just kind of continuously deploy the proceeds into amazing companies. Like there's these evergreen structures that are out there that actually have worked. Sutter Hill is a great example. Have worked quite well. But like without being able to post on social media, I think especially in this day and age, which I think you and I believe this, but like
you're drinking our Kool-Aid.
I think so. But
yeah.
Like one of the things I think is like is crazy is just like with all this noise and with also like the so-called AI slop that's going to get out there, right? A lot of content that's going to resonate is going to be this stuff. Like I put out a post that like went semi-viral recently, and it was just like, there's people were texting me like, hey, you spelled this wrong, or like, this, like, I think you meant like 50 billion, not 50 million and stuff like that. And I was like, absolutely, like, you're completely correct. And it still didn't matter because it was just genuine content that was like top of my mind. I was like, I just need to get this out of my head onto paper, right? And the stuff that came out of that is like, I'm catching up with people that like I haven't heard from in like 10 years who just like read that, were like, oh, that was really cool. By the way, like, could we chat? Like, I'd love to just catch up and talk and stuff. Like the level of learning and stuff like that comes from putting out this content is just phenomenal and just amazing. Like, also, you just build really good friends. Like, I will shout out Brian Chambers, who's the chief architect at Chick-fil-A, but he was on my podcast early, and now like we've become friends. Like, and it's just like he's done amazing things at Chick-fil-A. He's building, like, talk about building with AI. They're building amazing stuff. So not only do I get his help when I'm looking at a company or something, but like also I just get to talk to someone who I like and now I'm friends with that came from this like interview that we did just completely randomly, right? And so that to me is would just have so many knock-on benefits that not being able to do that I think would be frankly detrimental to returns.
Totally. And because you're such a curious person, it also just like feeds this side of you separate from returns that it sounds like you wouldn't want to live without.
The curiosity part, like, yeah, I think the reason why I left like fixed income trading and like stuff like that was like very lucrative job, but like you didn't have the curiosity was not rewarded. If you were like, oh wow, this oil and gas company is so interesting, let me learn more about it. It's like, who cares? Like, is the debt like cheap or is it not, right? And that's just not interesting to me, but it is interesting to other people. And so feeding that curiosity engine has always been something that I've been, trying to find, and venture is, I think, the best way to do that.
Yeah, and I can tell even with you wanting to do like your cooking podcast and trying guitar, like you definitely have a lot of passions, and it makes total sense why you're doing venture. And thank you for that. We're going to clip that and share that with our LPs because you just gave a perfect pitch for why we do our content. So thank you for doing my job. Is AI overhyped or underhyped?
So AI broadly is underhyped. I would say AI, like data center spend and CapEx and stuff like that, might be overhyped. Because like what you're happening is right now, if you talk to like an engineering leader, they'll probably say like, hey, we're using Claude Code, maybe actually even three things, but they're using Claude Code, usually Cursor, and then maybe even Codex as well, right? From OpenAI. And like that happens in this time of like change where you're just like, oh, I don't know what's going to work, and like let's just use it, right? But you're also paying 3 different bills for the team to 3 different providers. Like that does not last into perpetuity. And so what the hyperscalers are all saying is like, oh, we're seeing insane demand, so we got to build out. It's like, yes, that's true, but it is also a little bit point in time where you are having that dynamic where people are just trying new tools, and they'll try the same thing, the marketing apps, they'll try 3 of them because like who knows what will work best. And by the way, that may change even like when the next model comes out of like who might work best, right? So because of that, I think like the that kind of CapEx and data center build out is like kind of, to use the term bubble-ish is there. But in terms of the impact that AI is going to have, it's like we're still so freaking early. And like if you have not tried Claude Code, for anyone who's listening to this, it's like you got to go in and try like Claude Code or Claude Cowork. It is phenomenal. It is amazing and like life-changing.
And only getting better. This is the thing people don't understand, like exponentially getting better every day.
It's like, it's the coolest thing. Like any idea you have, talking about cooking, right? You can create like, recipe apps where it's like, hey, just, rank these based on different days, or you could put a thumbs up, like an app of like, hey, if I put a thumbs up this many times, like rank it higher, all these sort of things, right? It's just like incredible stuff. You can make these custom software. And I think that is like, that is just so cool. And then on the other side, like in terms of knowledge work, right? Like when you're trying to learn about, like my favorite thing is when I'm trying to learn a new industry, right? I take the blog post or the research papers or whatever, and I just throw it to Notebook LM. And then I ask Notebook LM, I say, I click like the longest podcast that it'll make, and then I ask the specific questions that I have like from that. And so what will happen is like Notebook LM will generate this podcast, but it's like in the context that I'm asking it to do. Like specific questions I have, like let's say it's robotics, like, hey, what's happening with scaling in robotics and scaling laws? And like I'll ask specific questions around that, and it'll start to answer that by taking the source content that I could go through. And then all of a sudden afterwards I can go back and be like, okay, now let me go read this paper and understand it a little bit more. That is like, that's like insane. Like
insane. Create your own content
so quickly. Yeah.
create your own podcast and you get to have it be completely custom to you. I mean, the era of personalized software, it's like insane and it's already at people's fingertips. I just think a lot are afraid to try it. And to your point earlier, I thought it was really smart. You know, everyone's trying all these different software providers at once. You know, they're paying for 3, sometimes 5 of the different, let's call it next gen marketing tools, because that was an example we gave earlier. You know, I'm sure you hear this a lot, but I'll share it. You know, a lot of people call it annual curiosity revenue instead of annual recurring revenue. So I think that's like a good way to kind of like sum it up. You know, it's there's a lot of ACR floating out there that is being disguised as ARR.
I am going to steal that. That is amazing.
You can steal it.
Okay.
You can steal it. I stole it from someone else, and I wish I could tell you who I stole it from. But that's a lot of how I describe it to people who are like not in our world. Is I just say like it's faulty. It's ACR, not ARR. So thank you for giving us a great example there.
Yeah, well, thank you for giving me a new term to take. So,
yeah, you can copy it. It's not for me, though. Shomik, thank you for being here. Can you tell everyone where they can follow you on socials, read your writing, and then learn more about Sierra?
Yeah, I guess on Twitter at Shomik Ghosh 21. And then I have a podcast. It was called Software Snack Bites. I actually just recently rebranded it. It's called On the Frontier now, and it's going to be talking a lot about like what's happening at the frontier of tech, and that could, you know, again, a lot of the things that we talked about will be some of the guests that we're going to have on. But yeah, and then, you know, you can always reach me at Sierra. It's just Shomik at SierraVentures.com. And so feel free to reach out if you'd like to get in touch.
Awesome. Shomik, thanks for being here. This was so fun.
Thank you so much, Erica.
Appreciate it. On Trailblazers, we're always talking about multiplying your impact, and that's exactly what Athena helps you do. Athena pairs you with a world-class executive assistant who becomes a true force multiplier for your business and your life. Working with my Athena assistant has been transformative. Gab was instrumental in raising Park Rangers Capital's fund in ways that I could have never imagined an assistant could contribute, from closing 6-figure checks to identifying new LPs we should meet to matching my tone perfectly in follow-up emails. He's elevated my capacity as a founder by giving me more time to focus on the highest leverage work. Athena isn't just about scheduling meetings, it's about unlocking leverage. Hundreds of founders, investors, and executives trust Athena to free their time and scale their impact. Athena is offering our listeners $2,000 off for their first year of service and priority onboarding. And you want that, trust me, there's a very long wait list. When you're ready to multiply your impact and free up time for the things only you can do, go to athenago.me/Erica-Wenger. That's athenago.me/ERICA-WENGER. Thanks so much for listening to the Trailblazers podcast. If you enjoyed this conversation, be sure to follow the show so you never miss an episode. You can also support our work by sharing it with a friend or leaving a quick review. It helps more contrarian builders find us. For more on Park Rangers Capital and our community of elephant founders, head to parkrangerscap.com or find me online at Erica_Wenger. Until next time, keep trailblazing.